Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 19th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Great Britain, we got CPI. Remember, Great Britain really doesn't do the flash estimates. They use their own CPI estimates, and it came in at 2.7%, expected to be 2.4%. Consumer price index going up means that there is demand for things that's driving prices higher. Also, they get PPI, which is producer price index input, which is 0.5. That's what they take in. And then they have an RPI, which adds back in housing costs to the core CPI. And that came in at 3.5%, expected to be 3.2%. And their core CPI came in at 2.1%, higher than the expected 1.8%. So all good on that front. PPI output came in at 0.2%, so the inputs and outputs are flat. That's good. Consumer price index driving higher. That means there's demand for those goods. That drives prices higher as well. All right, back here in the United States, we got building permits coming in at 1.23 million. Permits pulled. Housing starts better than expected at 1.28 million units, expected to be 1.24 million units. And finally, we got the crude oil inventories with a drawdown of 1.1 million barrels, expected to be a drawdown of 1.7 million barrels, so less of a drawdown there. Should cause crude oil to come back off a little bit as all of this inventory is really getting moved over into gasoline and distillates. It's not really showing up right now in the markets. As you can see, crude oil driving higher back into the 70s despite that bigger than expected or in line with expectations build. So I would expect this to kind of roll over like what we saw before, where it's really not a drawdown so much as they are just refining the products and putting it in different buckets that we're not really seeing in the headline numbers. All right, so then on to gold futures. They're moving higher as we got a mixed bag in the overall equities. Gold is pushing higher by only about $6. That being said, again, still that tussle over the 1200 mark where the bulls want to stay above that mark as a psychological level. Bitcoin, nothing to see here. As a matter of fact, somebody asked me on YouTube if I think that these cryptocurrencies are a joke or not. I'm not trading them. I don't know that they're a joke. I do understand their value in the overall global economies, but there's just so many out there that I don't think that we found the one that is going to be the benchmark, if you will, for the rest of the currencies. And with the volumes really becoming lethargic in Bitcoin, which is probably one of the most popular ones, it just doesn't bode well for the rest of the space. All right, bonds looking like they're finally making a bottom after yesterday's big tank. The overall markets just free fell as the equities had that late afternoon spike that really caused the bonds to come off. I think it's overdone to the downside. I'm actually going to be looking to do something to add some long deltas to my bonds, maybe with TLT or something like that, because this is just way overdone. I don't think the Fed's going to raise rates that fast. And we are past this value area low, and it just gets overextended here. This is where people are going to want to start covering shorts if they're short, because it's just in that real area of lack of volume, and it's just going to be a point where people are itching to cover shorts, all right? And longs are going to be looking to add down at these levels, so that I think I'm going to look for a little bit of a positive delta in bonds to catch some of that bounce there. All right, the VIX, as you can see, coming off well out of the teens now, but that's could change as we see the NASDAQ continue to go down. We're seeing this is what I was talking about with the mixed bag. Dow Jones Industrial Average up almost 200 points on the day, moving up right against this 50 Fibonacci extension. That should act as resistance. We get much above that, another resistance line lockstep. So I would expect we start seeing momentum to the upside in the Dow Jones slowdown, break above this 50 Fibonacci and settling above 26, let's say 500, that is going to be really where it has to go to even have a chance of going to check those all-time highs. All right, so Dow Jones moving higher, but finding some resistance right now. This is what I was talking about. NASDAQ given a lot of correction today as the FANGs are really kind of struggling with at least Apple and Google. Tesla's hurting as well. It's not in the FANGs, but it's not helping anybody either. Actually, I think Tesla was up a little bit, so that might be helping a little. So NASDAQ down on the day with the NASDAQ down. We've got the E-mini S&Ps up and making a new all-time historical high here. So that is pretty important. We've been talking about this. Once we got above that 61 Fibonacci extension, it was pretty much a all-out race to the all-time highs here. And as we can see here, that was printed intraday, so that is a good chart setup for the E-mini S&Ps when that's printed inside the day. So overnight inventory got obviously short as they covered these longs. This is what I was talking about late in the afternoon. We got this massive rally to the upside. A lot of that overnight inventory just getting out of their longs, and then if they got short, they got flushed out right away coming into the day session off the good economic data that we saw here and across the pond. So equities moving higher, but this is what I was talking about with the FANGs. Apple actually is coming back. One thing I want to note here is usually when we see these two types of dojis lining up right next to each other, that is a setup for a continuation pattern to the downside. So I would be concerned about the downside in Apple. Remember, I have long deltas on in Apple that I am actually becoming concerned about. I was killing it except for the last couple of days. This market movement has not worked out for me. So quick trigger finger on Apple, but I haven't done anything as of right now. And Tesla moving higher today as they make a bit of correction on yesterday's. I wasn't able to get off any of those short calls that I was going to add to Tesla. I might be looking to do that again today. Remember, I was looking at the 355 calls to sell yesterday. I actually even chased that down to the point where I went down to the 345 calls and still couldn't get hit because of the sell-off in Tesla was so fast that even trying to hit the market was pretty difficult. But, you know, sometimes when those things don't work out, it works out for us, right? So today might be the opportunity to go in there and sell those 355 calls or maybe even higher because volatility just hasn't come out of there yet. Amazon, again, I haven't done anything with, but Amazon coming back after yesterday's rally was not helping me out a whole lot with volatility expanding. That expansion and volatility, despite the fact that I was short puts in Amazon, just really kind of hurt today's movement to the downside, not helping me out either. So Amazon moving, wasn't able to get those off. I was trying to take those off for about 50% of max profit, didn't work out. And that's about it so far for today. That's all I'm really looking at. Haven't added anything or taken anything off. So just kind of keeping track of what the markets are doing today in order to discern which direction I think we're going to be going for the long haul. All right, so that's about it. Check out tomorrow's webinar is going to be on the long puts. I'm going to show you what kind of environment to set those up in. Do you need high implied volatility or low volatility? How long should we hold on to this? What's our exit strategy? All those things will be discussed tomorrow in that webinar, so check it out. Go to protraderstrategies.com, and if you can't take that, take it easy.